Okay, so with this particular trade, I'm in this Bitcoin trade right now. Getting off this, we see a displacement down below. We come back up. We get into our trade here, and we're looking for a continuation on the downside. And what I'm trying to do is I'm trying to trade the next reversal. So once we take out this market structure on the downside, I'm just looking for any opportunity to see in Bitcoin to see if this trade, and these are all just 5-minute candles, so we'll see, we'll treat it like a 1 minute, 5 minute. So what we're looking for here is the next, so I'm using MT3, so the or TPM3, so it's trading or take profit model 3, which is once I get the reversal, I'm looking for a BTC, and then the next SIBI that gets traded through on a close, I will close out the short trade when the next one gets broken. The SIBI forms and it gets taken to the upside. So as you saw right there, it started to trade through this candle. So a few minutes ago, that was all bold candle there. So there's a small little SIBI right there. So as you see from the start, when we first started running, there's no SIBI traded above here, no SIBI traded above here. Wick got through it, but no SIBI, or no body, no body, no body, no body, no body, and no body. We have a little wick going through here yet again. So when you're seeing this candle forming, this is the psychology candle. This is the one that's screwing with your head, right? This is the one that gets you second guessing yourself. This is the one that has you doubting all your this is the one that gets you second guessing yourself, doubting yourself all the time as to whether or not you've made the right choice, whether or not this is you've got your stop loss sitting just right, and so on and so forth. So you've got to be prepared to support your idea, and I'll put that, fade that in the background a bit so you guys can. So I'm just looking for this. It's called the take profit model 3. BTC to SIBI. That's the model 3. That's all I'm doing right now is just this treating this particular model, profit model. And so I'll put this up here as a Bitcoin short. It's taken a couple hours ago. And we're just going to see how long this runs down for. We got old lows down here. I have a take profit down here around 10 grand or so. But ideally, I want you guys to see this take profit model 3. Where you, let's just say this was making new lows and you didn't know where the your expectation of where this could end up. If you don't know how to pull your fib extension tool, so a fib extension would be something like this, or here. And 4 banger puts us right on that low, just taking out the lows there. Right? So if you're into paying yourself accordingly, then you can use the fib tool extension model as a model 4. The model 3 is BTC to SIBI, because then we're going to do an internal range boxing once that SIBI gets taken. And if you don't know what the boxing is, then just tune into the show every day. You'll know what we're talking about. So I don't want to see it get back above that level now. It's done its damage here. I want to see that continue on the downside. Now you could pay yourself at this, each one of these standard deviations, either half or full deviations. You can pay yourself. That might be the model, take profit model 4 method to pay yourself. I just have a trailing stop loss. I'm moving to an area that I don't want to see a body break above here. Now that I've wicked above it, I don't want to see a body get back above there. So that's where my stop loss is sitting for now. And this is a 5-minute chart. This applies to whatever chart you're on. So if you start on a 5-minute chart, stay on a 5-minute chart. If that's where you've gained your entry, stay on that and wait for your SIBI or BTC to end on that side. Because if we go back into a 1-minute chart, you can see how this was taken to the upside on the close. So you'd be okay, that's closed. As soon as we see that change direction, we're just coming back into this range. So this is what we call a bull trap. So you're in this little trap. It sets you up for, if you just use your inversions on the lower time frame as places to get long on, and you don't trade inside that range, you're expecting this to go back up here because you've overestimated where you think price will go. You get caught in a bull trap. If it doesn't break that structure right there on the close with a body, preferably a nice large displacement candle, then you're in a potential for a bull trap there. So all you're doing is trading from discount array to premium array. You hit it and reverse off of it. Inside that range, that's greater than 50%. So that's a premium portion of this small little range right here. Then it reverses, gives you a nice little reversal direction right there and continues going lower. Takes out the low, extends the range. So you can see how if you're trading on a particular time frame, if you start on that time frame on a 5-minute where we entered, I'm going to stay on a 5-minute. So I'm going to wait now for a market structure shift, or this, no, it's going to be a model 3. So it is BTC to SIBI, plain and simple. And we'll just let this play out. And then I keep moving the next BTC or SIBI that forms. If there's another one that forms down here, I will move this one above here. I move it to the last SIBI that forms. And if we continue going lower and another one forms, I'll be just above that one on a close. Or you'll have to almost be like 2 above them because you're waiting for this candle, the psychic candle, the one that's screwing with your head right now. That's the one that's developing. So you make your decision at the end of the candle. It's either when it's done, then make your decision about where you are and whether or not that price will continue in the direction you want it to go or not. A lot of people, they look at this and they go, oh, we're going down for sure. And that just turns around and starts going back up again. And you go, well, what the hell happened there? Because you're influenced by that big blue line, right? Instead of it turning into a big golden bar going straight back up again. But at this time, while it's forming, you're influenced by what you see right here. We're very visual people. We have 3 standard deviations down here. So we're looking for, that would be a take profit point if you're scaling out profit. But I'm just trying to trade for one model, specific model, which is the model 3. And this is not an ICT term. Michael doesn't have a specific trade exit model, like a take profit model. He'll look for specific levels and say, that's it, I'm aiming for that, and watch it manifest. I'm going to show you 3 or 4 different methods for managing once you're in a trade and you can get into stress-free, how you can manage your trade from here and trusting that you're going to rely on specific algorithmic setups that show you one direction versus another direction. So you'd pay yourself there. On a model 4, you'd pay yourself there. This old low, you must pay yourself at the rejection blocks. So if that's your rejection block, you got to pay yourself there. You may not get the lows, always pay yourself for those, but we're using a different method. Now, the fact that we're getting this close to the lows, we're at 4 standard deviations. We'll put that at. No, I don't want to do that. I want to keep, I'm trading this model. See how you start messing with your head? As soon as you start seeing, you know, some big profit in there, you start to go, oh, you start to screw with your head, right? Psych candle, messing with your head. You just see those, you look over here and you start looking at those numbers and you think, oh man, 7 grand, that's a lot of money. So it's 4 grand and it's stress-free. It's locked in profits. So you can use the 80-20 rule as well. As soon as you hit your objective, take 80% of your trade off, let 20% ride. So watch trade here. If we get a small fair value gap forming right here, then my stop will move just above this one. This small range here, I'm looking at this already. From there to there. 50%. It could just trace right back up into that small little swing and just go over there, pop into this range, and then start reversing. I want to see that little fair value gap continue to form there. And if it does, that's good, because now that becomes my level of, as we see this range extension, I just want to see it come back up and tap that and keep coming lower and reach for our overall goal of the day. And you can catch us live every morning on YouTube, ThetaWaveTrader. And we'll show you how to do these kind of setups every day. We look for these setups. We look for this trade plan. And every morning, I'll give you these setups. I give you multiple different ways to manage your trade, multiple ways to watch how the algorithm functions, and what you're specifically looking for your little price action study here. And this is it's not on the replay. Replay's up here. I am not replay. This is live as we trade right now. So this is it is not market replay. You can see market replay bar alert. Let me see that. The time down here is 11:37 in Canada time. And this is a 5-minute chart. So we're at about 11:30. So it's 2 hours New York time. It's 1:35 in the afternoon. So it's in that 5-minute window. If you see me on a 1-minute chart, you'll see it right there. 38, 11:38 Canada time. Two more minutes. So now here's the debate. Once you get into the situation where you have one SIBI here and one SIBI here, if it closes above this SIBI, but not above this SIBI, in other words, it trades within 50% of this range, 62% of the range, and then reverses and comes back lower, still, that's the debate you have to say to yourself. So the Model 3 take profit is just simply the rule of, if I trade above that on a close, it doesn't matter. I close my trade out. If it trades back below it and uses it as an inversion, I can get back in sync with it to go lower. That's the simplest way you can look at it. If you're willing to allow it to come back into this one, you want the second one to get taken on a close, then you know we're running for you, your stop loss. You can close your trade out there. So here's the debate. That's just the debate that goes on in between that swing high and that swing low. In terms of how far back do you want to give up profits? So that's 7,000 bucks. My stop loss is at 45. So you're looking at over almost 3 grand's worth of profit you're giving back if you want it to come all the way back up there, right? But it's inside that range. We're going to use the simple Model 3 method, which is if I see a body close above there, come back and tap it, I'm out. I don't care if it comes back up there. So we'll get ready to close this out. If we get a body on a close, back up there. So if this starts to wick all the way through here like this, and above the 50% get into this candle, then I have to leave it there until that candle's finished, or it takes my stop loss. Now, if you paid yourself at level 3 here, 3 standard deviations, then you made money, you're doing good, and your stop loss is sitting there, then there's nothing wrong with paying yourself. This is an institutional order flow entry drill in terms of it's just running back up and just tapping that fair value gap, and you want to see it keep coming lower now. It starts to work its way higher again. If it starts to work its way through there, close that trade, we're done. Now, ideally, you don't want to see a wick even pop through that. You want to see it just pop into here. That's the like nice little institutional order flow entry drill, and away you go. There's your A+ continuation. If you're looking at a graded response, that's the A+ kind of thing you're looking for. And you're looking for range extension. Again, if we go back to that 1-minute chart, you'll see how there's a small reversal here. Body trades above it. So you're like, ooh, this could be a nice reversal now. No, it's another bear trap. From there to there, you're more than 50% over that range. There's 50%. You're above it. And then it reverses and keeps coming lower. So when you're using a 1-minute chart or a 15-second chart, now you have range extension. Now, the ideal continuation is I'd like to see this continue going lower. Either take out our low, which is what we're looking for. I'd scale out a portion there, but I'm not gonna right now because I'm just gonna stick with the rule that we're looking for. So now I'm gonna be right above this level, right there. We've come back. We have an institutional order flow entry rule for continuation. So I want to see that now. Take out this low or touch the low. And if it does come back, I want to see this candle, its wick, half its wick, bottom of this one, and the body. That's it. That's all I want to see. The worst case scenario for me in terms of a graded response here is I want to see body, mean threshold of this candle. I'll close it out if it goes above that level. No, that's a rule I have. I'm sticking to the model. I just want to stick to the model. I'm looking for reasons to take the profit now. So stick to the rule. The rule is we're just waiting for a SIBI to form, for it to get broken on the upside, and then close the trade. So we really have no downside objective right now. There you go. Pay yourself. So you pay yourself a portion right there. So there's your 4 banger right there, right at that level. So you, again, if you're using model 4, that would be pay yourself at these standard deviations and move yourself to the previous standard deviation. So stop loss would be moved to standard deviation 3. You pay yourself at 4. If you get to 5, move to 4. Pay yourself. Just keep moving it to the one behind you. You might have to speed this video up. Just drag your bar across the bottom there and speed up the video so that you can see how where this all pans out. If I could speed up the video, I'll try and speed up the video, find a way to speed it up so that you can see the trade executed and completed when we finally get our objective, because this may take another hour or so yet. See, we take profit here. Now I'm watching this level right here. Well, I'll wait for this candle to finish forming first. So now the lows have been swept. We're looking for a reversal now for a long. And if it ends up being this little guy right here, we can actually start getting into a long situation after we've taken out this candle here. We've come back and rebalanced that candle. Or this candle's here, we've rebalanced it. Now I want to see if we start to march through this level. That's why you pay yourself. As soon as you get your objective, pay yourself. And we're just using the Model 3, so I'm not, even though you've got here, I'm using the back end. You know, there's a front end and a back end, how you to manage your trade. This is a back end management, so I'm using the the previous SIBI to manage the trade in the continuation on the direction I'm going. So I'm still keeping the full trade on, and I'm managing it through the SIBI side. I'm just trading it for a reversal, that's all. So that's the immediate rebalance I like to see. Now I want to see it just roll over and start coming back down here now. It's come back up and give us that immediate rebalance. Now you want to see I'm done up there. I don't even want to see it come back up here. And we still got another minute and a half or so, and we're just waiting for a SIBI. I'm not going to wait for, and we keep in mind that when you have an immediate rebalance, we treat it like a fair value gap as well. I'm just going to go with a straight fair value gap. I'm not going to do the immediate rebalances. That's more advanced ways of looking at your price action study, and that's not what I want to show here. I just want to show the simple SIBI. That is a way to manage your trade. Here's some model 3. I'm going to show you all 3 models. I'll give you demonstrations on all 3 models, and you guys get to decide which take profit method you like the most. I'll give you 4 different ones, and you get to decide what you like. And if it helps, if it works for you, take it. If it doesn't, don't sweat it. Just keep doing what you're doing. Just trying to give you some ideas. The easiest one, the safest one to use is the fib tool, Model 1. Model 1 works great for beginners. It works great for people who are super snipers that want to be able to take some profits right away, move into a stress-free trade right away, and just start looking at grabbing profits right off the bat and get stress-free. The whole point of trading is to try and get into a stress-free situation so that you can expect the trade to continue going in the direction that you want it to go, and not sweating if you're right, you're wrong. Price action study. Study your price action. Join us every morning live on YouTube. Our show is all about studying price action. Our show is all about how to recognize these trades, how to get into the trades, and how to set up take profit models that pay you according to what your risk tolerance is. I know I'm not live on YouTube doing this right now, but I'll add all my lipstick on this for a ThetaWaveTrader. I'll put all the carrot on there. We're just going to put the carrot. People say to me, why do you use a carrot? Well, let's look at the importance of carrot and the stick. What do you want to be led by, the carrot or the stick? Do you want to be stressed out in a trade? Do you want to get rewarded? The carrot, what does it represent? It's connected to the ground. It's rooted in fundamentals. It's rooted in clean, solid trading strategies. It's beta carotene, man. It's good for your eyes. In other words, you can see. The carrot enables you to see better. You start to see your trades better. This is all the symbolism I have around a carrot. It's the beta carotene. It's the clear visual reference to where you want to see price move to. And it's not a stick. You're not beating yourself up with a stick here. You're getting rewarded by ground-based trading models, plans, and you'll get rewarded. And the carrot is our little mascot. It's our thing, right? That's what the ThetaWaveTrader is all about, is trying to develop a stress-free place to be. Eat your veggies. It's all good for you, man. It's all good. You can't eat a stick. You need carrots. They feed you. So that's where the theory of the whole carrot little piece comes in. So that's why we have a carrot as a mascot on the front part of it. So there's right there. You could take another partial right here. At that low, you can take another partial there. Now we've got this immediate rebalance. I don't want to see the candle come back up in the side there. But we're just trading for the next SIBI. That's all. I'm not trying to make it any more loftier and fluffier than that. I'm just trading. I'm going to stay in the trade until we get the objective we're looking for, which is just simply at the next reversal. Like guys are saying, hey, why don't we do I was just asking everybody if they wanted to get in on a live trade or doing some stuff live, but I'm doing it now and it's being recorded so I can upload it later. I didn't think anybody would be interested in me just doing a Bitcoin trade live here, but I guess I could do I'll stop this one, stop recording this, and then I'll go to live. There's the carrot, nibble, nibble, carry on. If you're doing your Model 3, which we were talking about, Model 3, is that what it was right there? No, it wasn't. It was over here, I think. This was the one we're looking for. Yeah, that was the 4 banger right there. So 5, you take partial at 5. 6, take a partial at 6. There's the 6th. So you pay yourself, take a partial there. If you're using Model 4, which is 1, 2, 3, you keep paying yourself at the partials at these standard deviations, and your stop loss would be moving like right at 5. As soon as you hit 6 there, you move to 5. We're just going to put this up here at the low. We've already traded below the low, use the low as a continuation on the downside. And for me, that's way too much profit to give away. Like, you notice the difference? We're at $12,000, or sorry, we're at $11,000 right now. And if I leave my stop loss sitting above here, that's half that profit I'm willing to give away. I don't think so. So this candle here becomes important. I want to see the low, the wick here. Ideally, I want to see that stay open and give us another institutional order flow entry drill for continuation on the downside. Or I want to see no more than 50% of this wick. So my stop loss now is going to be sitting just above this candle's order block, because I don't want to see half that, even half that wick get taken. If that starts to run all the way through here and the mean threshold gets hit, that's your line in the sand, and then I'm closing it out. And even that is a $2,000 profit you're giving up there. That's why you can use Model 3. You can see pros and cons to each model. That's what you want to see stay open right there. And the next caret was right there. Take partial there off that guy. I'm kind of overlapping model 3 and model 4. Model 4 being the extension. If you use the extension tool instead of just the price leg here, that attempt to get above that and it fails and drops down below it. If you use this method, so I'll move this one to the side here, and we'll use the fib extension tool where you go high, oops, wrong one, remove. I want to use this trend based one. So if I go from high to low and then back to the high again right there and use this as the extension tool. So you look for one standard deviation here. So you pay yourself there. It's right below the low as well. 2, 3, 4, which is just below where we originally had. 5. You pay yourself at 5 right there, and then 6 will be down here, or you pay yourself in half increments on the way down, whatever method you prefer. That's a model 4, so I'm kind of overlapping it, and I shouldn't be, because I want to stick to my premise. But here's one of the pitfalls of using just, if you put your stop loss just behind the previous SIBI, you see how that SIBI is, you'd have to look at this one here as an immediate rebalance. But if you just go by the SIBI itself, we're way up here, and that's way too much profit to give back for the sake of it running up higher. I like this order block, and I want to see that this order block is going to hold price, kind of like when you see the price trade below it. If it comes back into the bottom of it, you want to see it extend lower. Price travels below it, comes back into it, travels lower. Price travels back into it, extends lower. That's pretty much what you're looking for. So there's that little SIBI we're looking for there. And the rule is, if we trade above it on a close, come back and tap it, we're closing out our trade and it's done. If this just pops up here, we're talking about the institutional order flow entry drill, just a little pop up, leave the piece open, and it continues going lower for number 7. And see how you can just be like in a stress-free place right now? Like, don't stress this. Don't look at all these numbers on the side over here influencing your decision to get out of your trade. If you've got an objective to aim for, by all means, partials, take partials. But if you're in a stress-free trade and you know you've just banked $8,700, if that suddenly comes back against me, don't worry about this. Say, oh, but you lost that. That's greed. That's just ridiculous thinking. That's negative thinking. You're in a stress-free trade at 8 grand in your pocket. If it comes back there, right now, you're at 12,000 bucks. We got stress-free real quick. And for a couple of hours ago, we took that trade. I think it was over here at 10:45-ish, somewhere around there. To 2 o'clock, 4 hours. I don't know about you guys getting paid $8,000 if it comes against us. That's a pretty good trade. Ooh, I don't want to take my profit down there yet. We're still wanting this to keep going, right? See that level? As soon as we take that low, partial. as soon as you establish a new low has been taken, partial, pay yourself. Now, I don't know how many times, how much you want to take out of that on the way down, because we've done lots of partials on the way down and paid ourselves. If you're using partial, every time you take out a low, take a partial, hit an objective, take a partial. There's nothing wrong with paying yourself along the way. This is just a simple method of how to manage that on the way down. I love the fact that we didn't even get an institutional order flow entry drill, which is what we're looking for. That's an A+ setup. It just opens and just starts driving down for the new low, extends the range. Love it. Next objective, 82.74. And again, this is live. Every morning we show you how to get into the trade. This is just those videos just on how to manage the take profit model. Now that we've broken that low, my stop loss now goes just above this SIBI here, because I know if I start to violate through this SIBI, provided if it's a candle that wicks all the way through there, we're going to end up getting above this level. Then we're going to come back into that range again. So I'm locking in more profits. And you'll take another partial right there, right in the carrot. Look for the 7 standard deviations now. Again, if you're using model 4, I'm kind of overlapping model 4 and model 3 here. Now what we're looking for is another SIBI to start forming in here and leave that open. Now when you go to your higher time frames and you look for a higher time frame objective, we're running into that objective, you start looking for these things to form. And as soon as they start to form in there, this is where you're looking to get long, right? So it only stands to reason that if you're looking to get long under an old low with a SIBI forming, fair value gap that forms, and you break the SIBI on the upside and you come back into it, that we trade that for a long. Therefore, why don't we take off our short in that direction and then trade long in the next direction based on that SIBI getting taken out. That's what we're looking for. And again, it's a live trade. Just because I'm calling it and saying I'd like to see another SIBI form there, and it doesn't mean this is all hindsight. It's not, but this is live as it trades right now, 12:06 Canada time. And we're looking for the next objective, which is 274. If you're a partial, you want to take your partial there, 274, and then we'll move the carrot a little lower. Gotta love carrots, man. They're good for your eyes. Good vegetables. Root vegetables. And bingo. There you go. There's your 274. Let's move the carrot down to the next one. So you take a partial right there. Next one. That's a model 4 if you're taking partials. Or you can still do what I'm doing here, but you're just trailing it behind the last standard deviation. So if you're always just dropping it down, but you're keeping your full lots on and you're not taking a partial, but you're just moving it to 1 deviation above, 1 deviation above plus the literally 1 deviation above and wait, 1 deviation above, wait. And in this particular case, it's our stop loss here. So for me, if I see a body break above here, this trade is done. If not, we're going to 8 standard deviations. And don't worry about all this stuff over here. 14,000. Don't worry about that stuff. This stuff can really influence you. The sight candle here, you start going, oh my God, I've never had $11,000 or $14,000 in my pocket before. I've got to get out. I got to get out, right? If you just trade this particular model, looking for 79,973. So while you're looking at your take profit model, which is waiting for the next SIBI to form, how do you manage the stop loss? And then you manage the stop loss by being above the SIBI behind it, or this order block that you see right here. You want to be above that, because if we get this SIBI gets taken to the upside before it takes that, then we're out. If it wicks through this and takes it out right away and then continues going lower, that's where your stop loss is. You're done. Move to the sidelines and wait. And if it goes down another $50,000, you don't beat yourself up over that, because trust me, you will see many, many, many times where this SIBI reversal is an awesome way to catch profits and protect your money on the way down. And right now, walking away with $15,000 or at least $11,000 of locked-in profit. Now, this assumes a lot of things. This assumes that we're going to keep going lower, and that's exactly it. It's not until I actually see this reversal that I say, yeah, we can be coming back into that range right now. But until then, there is no indication that this wants to go higher. Nothing. On any other time frame, I don't care. I'm on this time frame. I'm trading on that time frame. I entered in on it. I'm going to manage it here. You want to manage it by a 15-minute time frame, you're going to give yourself much bigger areas of retracement in order to see a 15-minute reversal and go, I'm on the wrong side of that and I've given up way too much profit. 5-minute is a nice clean level. I know Michael's a big fan of 5-minute, 15-minute levels. So we're going to close this trade out if we get a body above here. Again, you take another partial or move your stop loss accordingly to the next standard deviation if you're using the deviations as a way to manage your downside. Shed a little light on the subject. My Bell's palsy is doing much better this week. I can feel it starting to improve. I can start to feel my muscles cramping up in my face again. I'm getting some muscle tone back in there. And obviously my slurred speech is not so slurred as it was before. The corner of my mouth is starting to work. So that's awesome. The Bell's palsy has lasted me, what, almost 3 weeks now? It'll be 3 weeks in on Wednesday, I think. That'll be 21 days. And what I've done to manage it, weirdly enough, if you know anybody who's ever had a Bell's palsy, is acupuncture. I've had acupuncture with the little electrodes they put on there to keep the nerve firing off. And the red light therapy. I do red light therapy on the whole body every night anyway. And massage, and obviously talking. Just keep trying to make it move, man. So what trade here? So you can see how, if that was our downside objective, just taking out the old lows there, we've paid ourselves. If you paid yourself there, that's it. Your trade would be over. Here's how you could still manage being in this trade, and we're still heading lower. We've got nothing that indicates it's changing direction yet. We're still driving lower. You just need to back test this. You'll see that when you back test this, that this method is a great method for managing your trade. But again, sometimes you can get this disparity between where you've entered or where your stop losses trailed and this big drop down. And then you think, man, that's thousands of dollars. And then when it starts to come back up and then finally breaks through that SIBI, you go, oh, I've given back $4,000, $5,000 of profits. You might have to adjust rules, whatever your rules are, for big long candles like that. You have to start asking yourself, what order block's behind me? Is this order block's wick going to give me my line in the sand here? If this was all the way down, like if you get these big monster down candles that pop back up, like this is actually an hourly candle. Look at the size of that hourly candle. You don't want to be, for example, you don't want to see, if you're trading this on an hourly chart, you don't want to be sitting here going, well, I'm going to put my stop loss just above here. If it trades through this on a close, I'm probably on the wrong side of this. Well, that's a hell of a lot of profits to give all the way back there. If that's where I started, to give it back there, not as logical, right? So you have to ask yourself, what kind of rules do you want to establish on that? So you want to use the quarter rule. So you take that fair value gap. Now, when it's that big, you can use the quarters rule, which is simply taking your fib tool from the high to the low that's established, if that's the new SIBI, and you go, I'm going to put all my chart now quarters, and my stop loss will be just above 50% of that wick, and I'm willing to give up that much profit. Or I say, I am not willing to give up more than 25% of the retracement inside this SIBI. Not at all, because that's a retap of that old low. That's all I want. That's all I'm going to give it. I'm not giving it any more, right? You could look at it that way. There's many different, and that's your own rules that you'll have to establish around those trades. So back to our 5 minute again, we're just looking for this. So pros and cons. You can stay in a trade longer and take some of the stress off of your trade, your objectives. Because when you see these reversals happening, you've probably hit the downside objective you were looking for. I almost want this trade to hurry up and be over with so I can post it and show my point. So now, if we break this low here, look at the next potential partial down here, right there at the carrot. That low is taken. Now this stop loss gets moved to just above here, locking in more profits. And again, you'd be taking a partial down here if that was your. So this is kind of like a blind stop loss trail. Like you're letting it go forward. And we're going to see if this breaks on a 5 minute. I'll come back to this later and I'll just reference one more time if that was the actual turn point. Okay. So we're approaching 8 standard deviations. We're still 100% of our trade is still on and we're only using a Model 3. Dovetailing it alongside a Model 4 here, which is this how many deviations you can pay yourself at. And if you had 6 lots on this, you'd be paying yourself, you'd be at 5, 4, 3, 2, 1. You'd be done right there if you took off 1 lot every time you went down to the next level. This way you've got 100% of your trades still on. All the partials that you took on the way down still don't add up to that right there. So if your stop loss was sitting here above the 6, now the 6 is above the 7. As soon as we hit 8, you move your stop loss above the 7 for a Model 4. And we're just looking for 797 or 79,973. Important to remember when you're doing this trade model, this TP Model 3, you have to, whatever entry you're making on whatever time frame you're on, use that to manage it. So if this was an hourly one, you would be managing it on an hourly level, and you'd better be prepared to, like if you look at that hour one, where's the CIBI there? Like way back here. And if you're situated right up here, you have to decide again how much you're willing to get. You may be saying, that's fine. I'm in a big ass drop down here in Bitcoin. I'm expecting Bitcoin to just hammer all the way down to $30,000-$40,000 worth of lower. I don't care. I'm going to manage this on a 1-hour chart. You're in a daily trade. Let's say you're on a daily here and you're managing it on an hourly level. Then you're willing to endure this, and then it comes back all the way against you and takes out your profit of 15 grand. You're willing to throw that away because you're managing it on well, you wouldn't throw it away because you'd be sitting right here and you'd say, I just don't want to see that come back through there because I'm trading on a daily plan. I have a daily objective that maybe like on a daily chart, I'm looking for down here. I'm looking for a rejection block at 78.56. 1. That's my downside goal. Or this right here, I'm aiming for that as my downside goal, and then I'm done. I'm out. Okay, my standard deviations end at 10. You'd have to put more in there if you want more. Oh, we're doing a 5-minute chart here. Did you pay yourself at a partial? There's your 79,973 partial. Now let's move to our next objective, number 9. Partial. Pay yourself. Where are we sitting now? Locking in more profits. Again, we are live. There is no replay going on here right now. This is a live trade I took earlier this morning. I'm managing it with a take profit Model 3 BTC to CIBI. That's all. Oh, there's your next one. Take profit. Pay yourself again. Let's go here. We'll have to put that back up there. So right now we're sitting at 17,000 in profit. We've taken out that low we're looking at on the daily, right there. Looking at the objective here, last down close candle. Look at this. 50%, boom, done. Now that would be for me, that would be like a freaking terminus. I'd want to get out of it, but that's not what I'm trying to show you guys. I'd be out right there, terminus, done. You pay yourself at 9. It's about to come back and take your ass out. That's it right there. I would have ended it right at mean threshold of that last down close candle. But I want you guys to see the reversal. There's a little tiny one here still. I want to see that whole price. See if it holds. So if it eats through this candle, I'm out. I know we're looking for there's a little SIBI right there. We got another 1 minute and 30 seconds. So look at that, slam right up against it. It's still there. See it? Still there. And we're done. There you go. There you have it, my friends. There's a perfected, that would have been a perfect exit. So partial, done. I hope you enjoyed that. That's the Model 3. Let's just watch this for a few more minutes. So had we left our stop loss up here, I think this is going to be the reversal. So had we left our model or our stop loss way up here, given up even more profits, then you would have, it wasn't in the end, I didn't give up the profit level that I wanted. You're looking for this here. Again, that's that, how much are you willing to give up of your SIBI. So we're going to watch this for a few more minutes and see if this this closes above that level. That little, oh no, it's already, that doesn't count anymore because it's gone. So you have to use, there's a little tiny one sitting right in there. There is a one right there. So if your stop loss was just above that, because you don't want to see it close above there, you can see this still go lower. I just want to see if that mean threshold of that candle holds. That's mean threshold. Of the bullish order block. So what I'd like to see now is this get above this level, find some support here, and now I'm looking for a reversal. So I actually caught it a little too soon. I was too confident with the levels. So you pay yourself your standard deviations, lucky number 9, mean threshold of the bullish order block. Pay yourself there. I'm just looking for this reversal. So we'll see if that clears this level here. So that was 14,298. See how you got all these partials and that on the way down? You would have got a perfect partial, that right there. If that ends up being the reverse in Bitcoin right there, you'll see once it takes this high out here, we're going to start trading back deeper into the range. Those partials along the way and your stop loss sitting at 8, literally stop loss is out at 6. That would have been your model 4, trailing your stop loss down there. So we'll just wait and see if this last little piece finishes off. This would be a good example of if you have rules around, that's where your stop loss has to be. And if it comes back against you, so be it. You're giving up all that profit. Because the rules say if it wants to keep going lower, it shouldn't violate that with a body, that is. So if we continue to run lower, then that's it. The profit was out, and we're going to run way past this carrot, and we're going to keep coming down for that daily objective, which was much lower. What do we say the next downside objective was? 78.56.2. So 10 is right here. Okay, so now that one's closed, I'm gonna let this fast forward. I'll stop the video here. I'll make another one. I'll attach it to this, and then we'll finish off the rest of the explanation. We'll see. Well, what we want to know now is, does it continue going lower? And I didn't follow the rule of what I was saying is wait for the next SIBI to get closed above. So far, we've had no SIBI closed above here, and we're starting to roll over and come back down again. I got the whole idea of don't do what I say, not as I do, was wait for the SIBI to get taken. So I do like that mean threshold. We'll see if that holds. But if we continue going lower, you can see why this is even me. It gets me on this. I look at it and go, that's a lot of profit to give away. Come back against you, right? So that SIBI has not been broken to the upside yet. So I'll come back and we'll talk about this I'll come back in about another hour or so, and we'll see how these candles would have played out, and then I'll talk a little bit more about why that it's important to stay in the game and wait for the next SIBI to get taken, and look at how much profit you potentially can give up in order for that to happen. So we'll see. We hit a higher time frame objective. We'll see if that holds and it reverses, and I'll be back shortly. Okay, so far we're back, and we did not trade above that SIBI. So that came back, and I intervened, did not follow the rule, and look, we've got a continuation. So that's the next box. Now we're through the 10 standard deviations. Let's see if this keeps rolling. That's some, you didn't follow the rules. Funny. So I want to show you the model, and yet I violated the rule of wait for it to trade back above it. And this is the gamble. That's the part that plays with your head, and you start to see how much you're giving back in profits. And it is what it is. So again, we're keeping an eye on each one of those levels. So if we have that little tiny fella right there to there. Ooh, let me get that out of the way. Do that again. Let's get this down here. You would have taken another profit right there at 10. We have another little guy right here. So where would the stop loss be? Stop loss would be sitting just above here. You don't want to see this trade through this on a close and then come back through there. So the difference is we got out here somewhere. So we're going to see how much our trade that we got out at right there. I'll put that as our little marker, and it's right. Where is it? Right there. think that's where we're at. Yeah, right there. Right there. So we'll see if this, how far off we would have been. So our stop loss now would be just above here. So you've missed out all that profit so far right there if we just left it alone. And we're going to see if this fair value gap forms here. Then you'd be down to 9 or 10. Let's look at 11 standard deviations here. Let's go to minus 11. Then we'll go to minus 12. 12. Minus 13. Minus 14. Okay. So the next one is going to be right. Take profit is going to be right there. And you better have like a 12 lotter on there in order to pay yourself at that, right? Carrot's coming here next. We're looking for 12 standard deviations now. And now we have above us a new civvy. So now you've hit 12. Take another partial here. Not the mean threshold anymore of the order block. So that's gone. Looking for a number 12. Your stop loss will be sitting up in here. I'll pause the video and then come back in a couple of minutes here. All right, we're just coming into the next 12 standard deviations right there. You pay yourself another partial right there. And you would have been modeled 4. We'd be moving our stop loss to position 11. As you can see, if we were on 8, we got paid at 8 and we moved to 7, we were still okay right here. We were on 8. It came up to, oh yeah, it would have taken you out there. So 8, if you were using the model 4, you would have had, it would have hit 8, it had gone down to 9, come all the way back to 8 and taken you out. Come back, stop right there. So you would have been out at 9. That whole wiki part there. Okay, just so you would have known. There's your another take profit partial there. And now we have another. So now your stop loss would be moved to just above this one. And we're going to wait. It's so far from where we actually got out, because I didn't follow the rules. 80, 20, 221 down to where we're sitting right now is another 1,800 handles. And we're looking for, what was it? The 7,557, right? So rejection block, you definitely want to pay yourself at rejection blocks right here. I'll put the little root of the carrot or the top of the carrot right there. So you want to be tapping the carrot. Always pay yourself at rejection blocks. I'll pause it here. I'll come back when we get a little further. Okay, we're coming down to the last few seconds of this 5-minute candle. So we have a new fair value gap forming right here, a new SIBI. So they're getting tighter together, right? So watch this one now. Now your stop loss here would be moved to, I would be at least to the bottom of that fair value gap now, because if we trade through this on a close, come back to it, that trade is done. So watch real carefully now, right near the bottom of that near take profit at the rejection block. And you got 4.5 minutes for this candle to start climbing back up above here. Here's where the damage can be done. Inside this range, you have to ask yourself, from that high to that low, what's 50% of the range, right? This is the same thing we talked about at the beginning of this little jaunt. If that is slightly higher than that, what's the close on this one? This would be 999. I like it. 999 and 8. So that one is higher. So take your fibs tool from high to low. 50%. We're hitting it right now. Just tap 50 right there. You want to see it come back lower. I don't want to see it start surging back up in here, so your stop loss would have to sit just above here. You can get an institutional order flow entry drill, that's all you get, or you go just above it, right there. That's your line in the sand. Because we're looking to see if it closes above this level right here. If it does, now your trade is off before it gets to there. If not, you're saying, I don't want to see us get up into here with a wick. Because now you got to start asking yourself, when they start getting this close, you have to create a set of rules around this SIBI here. And when they're literally overlapping inside a small range like that, you say, institutional order flow entry drill, that's all you get. No more than 50% high, pull up just short of that consequent encroachment, and then come lower. I'll put it on pause so we're not dragging this out way too long. And we'll just wait and see if this continues going lower. All right, so we're approaching the last minute of that candle. See how that 50% of that wick was hit? We did not get above that level. We did not get an institutional order flow entry drill, and we did not get 50% of that. So far, this level, if we close below it, it's still, you're still short. We have no reversal just yet. So you got 25 more seconds, and we'll see where this closes on a candle. And this could be the end of the trade right there. And unfortunately, I don't know how much that would have been. Probably another 6 grand or more. Another 20,000, or that would have been $20,000 easily down to here. If that's where we're going to close out. 6 seconds. Wait and see right here. 3, 2, 1. Nope. We're still looking to go lower. Nothing else. So now my stop loss, now this has been done here. My stop loss will go right here. I don't want to see it come back up there because I don't want to see us retake this level, and I don't want to see more than half that wick get taken. More rules around other than just waiting for the simple basic Model 3 is, do we trade above this on a close? Because if it wicks through and comes back down and closes below it again, another rule that did not stick with the basic take profit at the next SIBI close, right? That's it. That's your line in the sand. You don't want to see it going higher than that. If you stick to the basic rule. So that would be, I would be out there. And we'd wait and see now. If you start trading through the second one, you've traded through 1 and 2, and we're still waiting for it to close. This candle is the psych candle, right? This is the candle that's freaking you out right now because it's going bullish. You've had 1 probe, 2 probes. This is the third probe up. Try and start pushing higher. We're just tapping institutional order flow entry drill right now. Continuation on the downside. So I want to see that snap back now and start coming lower. I'll pause it there until we have a look at what's happening next. Okay, we're coming into the last 30 seconds of this candle forming. You see how we're still below this SIBI. No bodies have closed above it. Those little psych candles have been trying to psych you out, trading back into that range. That was greater than 50% of that small little range from that little swing high there all the way down to here. You've just dipped into the premium level, which is sitting right in here. That's that SIBI. And we've got a body just closed now right there. Still inside that fair value gap. So you don't see that roll over and keep coming lower. We've had 3 attempts to get up there. Now we'll see if this, again, just simply following the rule of once a SIBI is traded through, we'll close the trade out. Otherwise, our next downside objective would be this 78. 600, 78, 570 level. So you're still in this for a short. And I'll just pause again so I'm not making this massive long video. You can see right here how that wick is the highest wick out of these little cluster here. That wick's 50% is what I wanted to see when I saw this one. I wanted to see no more than 50% of it. It ran through into the institutional order flow entry drill, came back up. Now we're using 50% of that wick. You can see it right there. And now you want to see this continue coming lower, and you want to see us close below that level right there. Okay, we're in the last 20 seconds of this candle. You want to see this close below this level, and then we're looking for range extension. I expect to see this candle close below here, trade back up into this level, and then start going lower. Close below. Again, this is a live trade, or it's a live feed. This isn't market replay. And we're still do not have a SIBI with a body that is traded through it yet. So here's again that little idea of how far back into the small little range are you willing to go. You'd have to look at the premium level if you're coming back into that, the premium SIBI, and I'd allow it to touch that and come lower if it's got any legs at all. But ideally, if you're just looking at BTC to SIBI, that's what we're looking for. See where that closes. So we can come back into it like that. That's fine. Now I want to see it roll over and come back down again. If it trades through it and closes, again, our trade is off. We close the trade out there. And then I'll pause this for a while and we'll let another dozen or so candles go by, and I'll finish off the video with, is this the reversal? Did we get the reversal there? So just following the simple rule, and not so simple because I took the profits way too soon. All these are psych candles that psych you out. So that psych candle got me. Your psych candle's coming back. We do not have a body closing above it yet. And we still got 3 minutes left of this candle. And we're already trading back through this. So this doesn't feel good to me. It feels like we're not heavy now. The potential is for this to turn back into this range a bit more, run back up into this premium box here a bit more. I want to see it snap off, come back down. We'll wait for a few minutes and see where this ends up. Okay, we're coming into the last 30 seconds of this candle. And if we close above that, here's where the last piece of, do you juice the lemon? So I'm going to show you how the last little juicing of the lemon here. So what you want to see is if in the next 10 seconds we close above this, you have to develop rules around this very next candle. This is your fail-safe candle. So 2-1 right there, bang. So now my rule is if it trades back above that level, I close the trade out. Right. It's literally sitting right on it. If it trades back to this level, I close the trade out right there. Stop loss now would be moved from, from there to there. And I'd let it sit right there now. And I'm looking for the trade to finish. Now that we've closed above that level, we are now done this trade. Here's how you juice the last little bit out of it if you can. If it trades back down into it right here and taps it, you close your trade off right there and you make a last little bit of juice there. You pull your stop loss to the top, wherever that opens. If it pops back up above, right there, you're out. Done. Terminus, let me get rid of those levels now. We're all done. So you hit 12 down here. You would have hit the 12th box there. So now we're looking for a reversal. Okay, just so you know, that's where your terminus is. Terminate trade here. That's it. You're done. Right there. Violated it. Rule broken. Done. Now watch. We're going to see if this now starts to run higher. So our trade, so we got out right there, or I got out right there, and the difference between there and there is probably another $5,000 or more. That's the reversal right there. And now watch to see this starts going back into that range and you go, I've got myself a pretty awesome take profit model 3, but busy to Sibby. It works. It's awesome. And follow the rule. If you don't follow the rule, you get your ass handed to you. You lose potential for lots of profits. And as you saw, I was looking at lots of other potentials for reversals, like the mean threshold of the down close candle on the higher time frame daily. So there's lots of potential influences there, but you're still looking for this. You got it. You're out right there. So that's that. I hope you enjoyed that. I will put more of the Model 1 and Model 2 on here in the future. And you can see how Model 4 would have taken you right down to 12. I think we were out up here when it actually retraced back through that 1. If we were only tracing it 1 at a time, you wouldn't have reached your 12. You would have been taken out. You would have been paid at 9 and then taken out at 8 models. So you would have been slightly better than me jumping the gun too soon, right? And that's the closeness of that trade there. So I hope you enjoyed that, and I will see you guys bright and early on Monday. This stuff happens all the time, my friends. Check us out, ThetaWaveTrader, YouTube, Mondays to Fridays, live at 9 o'clock Eastern Standard Time. And yeah, we're live. We're with you guys every day showing you this stuff. Feel free to join our Telegram chat. We've got awesome people in our group that are more than willing to help you out if you're fresh and you're new to trading. And you can make bomber trades like this, and we'll show you how to do it. Till then, I will see you bright and early Monday morning.